Resumes critical trade links with the United Kingdom, but travel will depend on negative COVID test results. A Brexit deal hangs in the balance as officials talk on. Michel Barnier says both sides are ready to make a final push. Welcome back to the programme. This is the European Market Open, waiting for European equity markets to open up. And futures had been looking a little bit more positive as we've been passing through the last hour or so. Overnight, President Trump with that impromptu statement around the pandemic relief bill, not happy with some of the things that had been attached to other legislation that was attached to it, but also unhappy with the amount of aid going to Americans. And he's found support from Democrats in that view. Will that delay the passage of the bill? Seems to be a crucial question, but it led to a slight wobble in US futures and European futures, but we've recouped those losses, it would seem now. So looking now at where we're opening up on these European equity markets, and we can see we've got some moves to the upside coming through, or moves to the upside anticipated this morning. And in fact, that is what we've got for the Stock 600 as a whole, with the IBEX up by 0.1%. The FTSE 100, though, is a laggard, down around 0.3%. Again, Brexit uncertainty, what's going on with the FX markets might be something to do with that. The DAX is up by 0.3%. The CAC 40 up by 0.1%. So once again, we see the UK market going in its own direction. Let's talk about where we are on these markets then. The UK and EU negotiators are trying to push a post-Brexit trade deal over the line before Christmas. Joining us now is Jane Foley, Rabobank Head of FX Strategy. Jane, good morning to you. I wonder if people were thinking of winding down as a result of getting into the holiday season, very close to Christmas now, and the new year. We've still got so many news items on the agenda, and starting here in Europe, of course, Brexit and the unresolved nature of those trade talks still front and centre. Are you gearing up for a deal to come between now and the new year? Is it getting to be too late with the European Parliament saying it has no time to ratify it? How are you now approaching this time horizon?
Well, good morning, Anna. I think for many people in the market, there has been this belief really for quite a while that there is still a deal, a skinny deal there for the taking. And I think that's probably still the central view. Now, clearly, that confidence has been knocked along the way, particularly, a week or two ago. But I think now there is still a prospect that we could get a deal. We have some of the news stations suggesting that perhaps we could get it as soon as today. And I think many people involved will be hoping it does come today, and not over the Christmas break. In terms of sterling, if we look at the price today, that does reflect the fact that there is a little bit of hope. Sterling certainly not on its highs, but certainly it is off its lows. So there is the expectation that perhaps if we did get it, then Parliament would be recalled next week in order to push it through. And there is also speculation in the press that whilst the European Parliament would not be able to vote on it before at the end of the year now, that they would be able to potentially use some sort of legal fudge to enable the deal to be put in place before they had time to ratify it.
Jane, I suppose there's a risk then that we get a deal during some fairly thin market trade as well. I mean, we've got today, and then tomorrow you start to get into a period of reduced opening hours for various markets, and then thin volumes on Christmas Day, perhaps in some of the Asian markets that might still be open. That would make for very interesting moves in markets, because we all know that unexpected large moves can happen in thin volumes.
I think you're totally right, and certainly, we have already been seeing an awful lot of choppy trade in many asset classes in the last week or so, and particularly, of course, currencies like sterling. Now, it is likely to be choppy, but that said, I think many people involved in the sterling trade have had a lot of time to prepare about the trades that they would do or wouldn't do if a deal is or isn't reached. So that might give some control. I would imagine that there have been orders placed and stops taken, etc. So that could give a little bit of control. But I think you're right. There is likely to be some choppy activity. But I think we can say with some certainty that if there is a deal, sterling will go up, and if there isn't, sterling is going to go down. So to a certain degree, that there is a binary here. But there are lots of ifs and buts too. For instance, if there isn't a deal, but the door is left open to talks next year, that clearly is going to be a lot more reassuring than no deal at all and a really bitter divorce.
Do you think that the Tier 4 lockdowns that we've seen introduced, Jane, in many parts of the southeast of England, the restrictions we have in Wales, in Scotland, the fact that Robert Jenrick, Housing Secretary, said this morning government is meeting today to discuss more areas moving into Tier 4. Do you think all of that is going to limit the upside that we might see to the pound on any deal being reached?
Yes, I think you're absolutely right. I mean, I've thought for a while that any relief rally that we do see could be short-lived and certainly may not have too far to go, largely because, of course, it could be a skinny deal and many sectors will be left out in the cold. But when you place the economic and the political backdrop on top of that, I think sterling remains a very vulnerable currency. Now, if we go back a couple of weeks ago, there was a lot of optimism that the UK had the first rollout of the coronavirus vaccine, that could potentially help the economic rebound. But again, fast forward to now, and what we're expecting as you say, further Tier 4 restrictions, and that could place an awful lot more weight on the economy. So I think what people are adjusting to now is the real realization that Q1 could be really quite poor in the UK if we have these Tier 4 restrictions, maybe for quite a few more weeks. That is going to weigh. And also, if we look already over the last month or two, we've had various revolts of Tory MPs against the Prime Minister. There isn't any sign that those are going to go away. This could be a quite difficult year, 2021, for the Prime Minister as well. And that is political uncertainty that could create volatility and potentially downside pressure for the pound as well.
I'm just thinking, Jane, about growth expectations, and this might be a little backward looking, but maybe just underlines what we've all been through in the last 9 months or so. We got Spanish GDP numbers for the third quarter just coming through this morning, down 9% from a year earlier. The estimate was for something almost that, down 8.7%. And it looked quite similar to the number we got for the UK on a similar metric. So the UK economy shrank, we got this yesterday, 8.6% in the third quarter versus a year earlier. This is the extent of the catch-up that economies have to play going into 2021. Do you think we're going to start picking winners based on how quickly, which are the countries that are going to be able to close that gap with the past the quickest?
I think people have already started to do that. So, for instance, when we saw the vaccine rollout in the UK, that sparked a fair amount of optimism with the UK and sterling markets. So, for instance, the UK we know was hit bad. It had a lot of coronavirus cases, and also it's a service-based economy, and that was considered to be one of the reasons why the UK economy was hit so badly. So then the expectation was they've got a quick vaccine rollout, and therefore the bounce will be quicker. But of course, when we put that in the perspective of the Tier 4 lockdown now, when we put it into perspective of disruption potentially because of Brexit, and that we've already got disruption before Brexit. So from that point of view, I think the market does have to remain on its toes and continue to reevaluate. Now, when we look through at what's been happening in the last few months in Europe, we've seen several countries, of course, tighten up coronavirus restrictions, and that really does mean that the bounces that we're seeing in many countries for Q3 GDP data are fairly meaningless. That we know that Q4 is going to be bad, and Q1 could potentially be bad too, particularly with this new strain and these additional concerns about the coronavirus spread in Europe.
Thanks very much, Jane. Good to speak to you. Stay with us. Jane Foley, Rabobank's head of FX strategy. She'll stay with us on the programme. More to come from Jane, just coming up to 10 minutes past 8 here in London. Coming up on the programme, President Trump demands changes to the rescue plan passed by Congress. The details on why he may not sign off on the package next. This is Bloomberg. Welcome back to the European market open. 11 minutes into a trading session that shows European equity markets up by 0.4%. The FTSE 100 is a bit of a laggard this morning, down by 0.1%. Elsewhere in Europe, we see gains. In particular, the FTSE MIB up by 0.7%. The pound is, as ever, the distinguishing factor. The pound making some gains, 0.5% higher, 134.32. Perhaps that weighing on the FTSE large caps. Let's go to Bloomberg Business Flash. Some of the top corporate stories that we're covering here at Bloomberg this morning. Next Digital is soaring in Hong Kong as its Apple Daily newspaper reports founder Jimmy Lai has been granted bail. He'll be confined to his home and have to report to police 3 times a week. He was charged earlier this month under the city's controversial new security law. The paper is reporting Hong Kong plans to appeal the bail decision. Citi's fixed income traders are likely to see a 10% bump in their bonuses this year. That's as they're set to post their best performance in more than a decade, with revenue up over a third this year. But Citi has to balance that performance with $17 billion it's setting aside for souring loans. Elon Musk once tried to sell Tesla to Apple for 1/10 of its current market value. But Elon Musk says the CEO, Tim Cook, refused to take the meeting. It came during the darkest days of the Model 3 program when Tesla was burning through cash. Apple declined to comment on the remarks made by Elon Musk. That is your Bloomberg Business Flash. So President Trump is demanding Congress amend the bipartisan COVID relief package that he had been expected to sign.
I am asking Congress to amend this bill and increase the ridiculously low $600 to $2,000 or $4,000 for a couple. I'm also asking Congress to immediately get rid of the wasteful and unnecessary items.
President Trump there. Jane Foley, Rabobank head of FX strategy, is still with us. So President Trump wanted more money for Americans. He also objected to some of the other spending that he deemed to be wasteful in a bill attached to the pandemic relief bill, Jane. Democrats have said, yeah, sure, we can do more money. Republicans, less keen. They just want something signed. So where does this all leave us? It seems as if they've sent us a little risk off during the Asian session, but now markets back to a more risk on vibe. So how do you interpret the lasting value of President Trump's comments, Jane?
Well, it does seem that the market, certainly the fact that futures are pushing higher again this morning, is sort of discounting them. And I have seen some commentary this morning, several people saying, well, look, they do expect that Trump will sign these potentially at the 11th hour before Christmas, that this will get done. I mean, from the Democrats' point of view, of course, these comments are going to be welcome. And Trump himself does sound like the Democrat he used to be in terms of the aid he wants to give to help Americans. And certainly if we look back at the negotiations for this fiscal bill, that the Democrats certainly wanted something a lot bigger to start off with, and they have had to compromise down, potentially because they thought that the Democrats wouldn't get control of the Senate after the January the 5th runoffs. It could be, of course, that Trump wants to leave a legacy. He wants to remain a people's man, but there's some of the aspects, of course, that he also wants to take out of the bill, aid to some African countries, for instance, and that is, of course, true with his very nationalistic point of view.
Where do you stand on the dollar and how badly it does in 2021, Jane? There do seem to be so many guests who tell us that we are going to see a weaker dollar. We've already seen a much weaker dollar, although in the last couple of days, with the news of the variant of the virus in the UK, that changed just briefly. But now we're back to dollar weakness. How long does that last?
Well, you're right that this is a very overcrowded trade, and I think it's almost a relief to see pullbacks in the way that we did or have done this week. So I think pullbacks, when we get an overcrowded trade, are inevitable. Does that mean that the trend is over? Well, possibly not just now. And for instance, if we look at one of the main drivers between the move higher, say in euro dollar, is the real change that we had in spring in real interest rates. And if we look at what the ECB has been warning about in terms of inflation in the Eurozone, well, they're still saying that deflation could stay here for a while. Their forecast for CPI inflation, for instance, at their last policy meeting, they revised down CPI inflation in 2020 and 2022. And the market doesn't really buy the fact that the ECB is going to be that successful in creating inflation. And that means that real interest rates continue to favour the euro. So perhaps we need an adjustment in that real interest rate spread for things to turn around for euro dollar. Now, that could be when we get inflation in the Eurozone, which is probably going to be a long time yet, or when we get higher real interest rates in the US. So perhaps we have to wait until there is real signs of better growth, for instance, in the US, when we see market speculators beginning to wonder if the Fed is going to back out of its extremely accommodative policies. And that too is going to be quite a while. But maybe this time next year, maybe 2022, we might begin to see a change.
I was hearing from my colleague Danny Berger a little earlier on about the fact that the death of carry trades has been called many times and then seems to have come back to life, and this interest rate arbitrage trade given some extra life by, in parts, the weakness of the dollar and borrowing in dollars. How much do you see that as a feature of 2021, Jane?
You know, I think the dollar weakness is almost forcing people to look for greater yield. I think we've seen this big flow recently back into emerging markets, the same way that we see a flow into high risky assets such as equities. When we see interest rates really low, maybe even conservative investors are pushed into taking more risk, and I think this is going to be a trend for a while. Now, the big question is, how much will other central banks push back against the weaker dollar? Because no one wants to see their currency appreciate in a low inflationary environment, and we've seen so many central banks in 2020 adopt policies like quantitative easing. And I think Australia was a very interesting example of this when they extended their quantitative easing program in early November. And they said quite candidly that the reason that they're pushing that further down the curve was to keep bond rates low, to stop the Australian dollar looking attractive, to stop the carry, really, to stop say, Japanese investors piling into Australian bonds for the yield. So there is going to be a pushback. How far dollar weakness does extend, of course, is related to the Fed's balance sheet, how much it wants to use that to stimulate, to pressure the US dollar. But other central banks will be fighting back.
Thanks very much, Jane. Jane Foley, Rabobank, Head of FX Strategy. Thank you very much for joining us. 18 minutes into a European session that looks broadly risk-on. Jane's going to continue her conversation with us 9 a.m. UK time on Bloomberg Radio. I'll be going there to Bloomberg Radio after this programme. Jane and I will enjoy another conversation there. Coming up here, though, Germany's boardrooms are some of the most male-dominated in the developed world. Now the government wants to do something about it. We're live in Berlin with that story next. This is Bloomberg. Welcome back to the European Market Open, 21 minutes into a session which shows European equity markets bouncing once again from earlier weakness this week, up around 0.5%. Now, Europe's largest economy may have had a woman at the helm for the last 15 years, but it is seriously lagging behind other nations when it comes to the representation of women in the boardroom. Let's get further into this conversation now. Joining us is Bloomberg's Aggie Cantrell in Berlin. Aggie, good morning. So why is the government pushing for a quota then of the number of women on boards? The government trying to do something about this?
Yeah, hi, Anna. As you said, Germany is really lacking compared to its peers when it comes to how many women are at the helm of their businesses. In the US and the UK, it's around about a quarter of seats on the boards of their top 30 companies that are taken up by women. But when this was last looked at in September this year by a campaign group, the women only occupied about 12.8% of these executive roles in Germany. And as well as this, there is 9 companies on the DAX index that don't have a single woman on their management boards. And these include brands like Adidas, which of course have a lot of female consumers, as well as some of the newer DAX members like Deutsche Wohnen and Delivery Hero.
That's interesting because that covers a number of sectors, doesn't it? The list you've just read out there. Will companies be impacted enough for this to actually make any difference on the ground then, Aggie?
Well, that's kind of the question behind it, because this proposal is supposed to be implementing gender quotas for listed companies with more than 2,000 employees. But there is quite a significant loophole in that, which means that it would only be a requirement on boards where boards have more than 3 members on them. So in real terms, this would actually only make changes in about 30 of Germany's top 107 companies. And the Green Party members have been, in the Bundestag, have been questioning whether this proposal goes far enough, and have advocated instead of a headcount system that they would rather some sort of percentage of about 30%. So then this would avoid some sort of token woman on boards. But when we spoke to Social Democrat politician Katja Maas, who's been pushing for this policy for years now, she still sees what they've done here as a historic achievement. This is what she had to say.
Wir kämpfen ja als Frauen schon viele Jahrzehnte dafür.
We've been fighting already for many decades so that women are not a foreign concept to the executive levels of German industry. We have now secured an historic achievement because we've agreed upon a binding legal requirement for these executive boards.
The decision still needs to be looked at by the German government and also needs to be voted on in the Bundestag. But it's already been hailed by German media as a necessary step forward. Anna?
Thanks very much, Aggie. Aggie Cantrell from Bloomberg in Berlin. Thanks very much for bringing us the update. Let's get to some of the movers this morning. The broad feeling around these markets then is one of a slight risk-on feel, but we're heading towards those quieter days, heading into the holidays and the New Year period. Some of the individual movers for you. CD Projekt, let's have a look at that one. This particular stock is now down in trading in Warsaw, down by 4%. It's actually been whipsawed quite a lot by some of the numbers it put out earlier on. It gave an update on the cyberpunk sales, but then we've had some fairly negative commentary coming through from a number of brokers. We saw it jump 2.8% at the open, then fall down by around 4%, and it remains in that territory. KN Energy, that stock really rallying today, up by 32%. It's won a $1.2 billion tax dispute with India, so that's proven to be fairly lucrative for that business. And Daimler, let's just have a quick word on what's going on at Daimler. That particular stock up by 2.8%. Daimler considering the truck unit IPO at the end of next year. That is according to the Handelsblatt publication in Germany. So we'll keep an eye on the autos space there. In terms of the overall markets, then I mentioned we're modestly risk on. Monday was very different. Monday we saw heavy selling. That on the back of the new variant of the virus in the UK and the closure of the truck routes and the freight route between the UK and France. All of that weighed very heavily on sentiment, not just in Europe, but actually globally for 24 hours or so. Yesterday, we started to claw back some of that globally in terms of the risk on trade. And today, we seem to be continuing with that move. So we do see these moves to the upside of around 0.5%. Even the FTSE 100 has been briefly in positive territory, even though it is fairly flat right now. From a sector perspective, healthcare is the one of only 2 sectors in negative territory. Certainly the biggest falling sector, food and beverage, also under a little bit of pressure. But elsewhere, we see all sectors moving to the upside. Travel and leisure and autos and parts. We talked about Daimler getting the best of the gains this morning. Up next, the Brexit deal hangs in the balance. Boris Johnson and Ursula von der Leyen make a last-ditch effort to reach an agreement before the UK leaves the single market next week. We'll discuss that next. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into your trading session, which looks broadly positive for European stocks. As I mentioned earlier, up around 0.4%. The FTSE 100 a bit of a laggard, but elsewhere we've got some decent gains. The IBEX in Spain up by 0.9% this morning. The FTSE 100 might be to do with where we are on the currency. Let's get to a news update for you now. Let's get the Bloomberg First Word News. Some of the top stories we're covering here at Bloomberg. A disgrace. That is how President Trump described the rescue package passed by both houses of Congress. He's demanding changes before he signs it, including stimulus checks of $2,000, over 3 times what's been agreed. He also wants to remove what he calls wasteful and unnecessary parts of the bill. The Bank of England needs a laser focus on keeping inflation expectations in check after the pandemic. That is according to the chief economist, Andy Haldane, warning that if the central bank lets them spike, it will push up bond yields, adding to the UK's massive debt burden. He spoke to Bloomberg's Stephanie Flanders on her Stephanomics podcast.
Near term, very near term, the next quarter or two, as the vaccine rolls out, it's going to remain a bumpy ride. Not as bumpy as earlier this year, but bumpy nonetheless, because we see virus cases on the rise, we see restrictions on the rise, and some of that stop-go cycling we've seen this year, I think, will persist very near term.
Israel is heading for its 4th election in just 2 years. Its governing coalition collapsed after just 7 months after failing to pass a budget. The new ballot is set to take place on March the 23rd. Polls indicate a new challenger may be able to win enough support to dethrone Benjamin Netanyahu, who's been prime minister for over a decade. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now, 9 months of talks between the UK and the European Union over a post-Brexit trade accord are hanging in the balance. Prime Minister Boris Johnson and European Commission President Ursula von der Leyen intervened personally in a last-ditch bid to reach an agreement before the UK leaves the single market at the end of the month. Officials are trying to bring talks to a conclusion as soon as today, we understand. Joining us now is Georgina Wright, Associate at the Institute for Government. Georgina, I'm not sure if we're supposed to have inklings or hunches about this stuff. So you can either tell me what you think based on a hunch or what you've heard. Do you really expect that we might be in a position to see a post-Brexit trade deal today, or are we talking about next week?
I mean, that is the million-dollar question, isn't it? I think businesses will certainly hope that a deal would be in sight today, because we are fast running out of time and they need to know what is going to happen on the 1st of January to prepare. But like with everything with Brexit, time is really the enemy. And we know that we've heard that reports that a text is in sight, more than 2,000 pages long at this stage. But there are still significant differences, particularly on fisheries, and it's not clear that they will be resolved today. Some people are sort of mooting the 24th of December, so Christmas, as a more realistic deadline.
So what do you make of the latest standoff on fish then, Georgina? Because we seem to be down to arguing whether the EU fishing in UK waters should be reduced by 25% or 33%. The French have said no to this. Where do you see the room for compromise? Is it around those numbers? Do we pick one in between? Or is it around the length of implementation?
Well, that's an excellent question. I think it's going to have to be both, to be honest. We know that if there is going to be a final deal, it is going to be the result of compromise where both sides give in. I think for the EU, there's 2 things. One, it's about access, and I think the British UK negotiators have accepted that. And now the question is more about how much they can actually catch. Can there be a total quota, or will it have to depend on the type of fish? And it seems to be that the disagreements are on how much EU fishermen can actually catch in terms of, say, tuna versus mackerel. Again, I think there's going to, for the EU, the compromise will be really, can they sort of cross-retaliate? So how long does that implementation phase look like? Is it over 5 years? Is it over 6 years? And then what happens after? Do you have annual negotiations? Do you have multi-annual negotiations? I mean, I think both sides really want to break after the constant negotiating that they've had over the past year. But again, I think for the EU, they want to be able to cross-retaliate, and they want to be able to retaliate quickly. So again, we'll have to see in the final text what is actually the compromise, if there is one.
Yeah, in terms of cross-retaliation then, Georgina, this week has been a really interesting illustration of, as if we needed it, we knew it in theory, but now we've seen it in practice, of the vulnerability of some of the UK's supply chains and indeed the way that the UK supplies parts of Europe as well with produce. What do you think that lends to that conversation about cross-retaliation? Do you think the two have become connected at all?
I mean, to be honest, I don't think France's decision to close its borders had anything to do with Brexit. This was really a health and safety concern for the French government and also for other neighbouring countries. There's obviously a key concern about the virus, about it mutating and about it being so easily transmitted across borders. Now, we know that there has been a decision to reverse that, and now there'll be test and trace at the borders for lorry drivers that are coming into the EU from the UK. So I think it's really important to remember this didn't have to do with Brexit, but you're absolutely right that this was the first kind of sign of what disruption at the border could look like. I think in terms of cross-retaliation, it's not really about stopping flows. I think both sides recognise that they want to be able to ensure that goods can continue to cross border as seamlessly as possible. This is more about a question of, well, if suddenly the UK decides to change fishing quotas, can the EU then limit access, for example, to its energy grid or something like that? So it would really be cross-sector rather than specifically cutting, goods coming in and out of the UK.
So we'll see what the deal, if we get one, says about that kind of cross-retaliation. What about the ratification process, Georgina? We heard just on Monday from a member of the European Parliament who said, look, it's too late for the Parliament to assess this now. We don't have the time to read it, and so we're not going to be able to ratify it by the end of the year. Will the Council come up with an alternative process if we get to a point where we have a deal for them to approve?
Yeah, so the EU treaty allows for that. So there is a clause in the treaty that says that if the EU reaches a trade agreement or an international agreement with a third country, then it can provisionally apply that agreement pending full ratification. So that basically means that EU governments together can say, do you know what, the European Parliament doesn't have time to vote on it, but we, in the meantime, will provisionally apply it. And so the question there, it's not that simple. It's not a yes or no decision. So the UK and the EU negotiators would have to decide, what do they provisionally apply? Do they provisionally apply the whole deal or only bits of it? And then, what happens after that? And I think for the European Parliament, they've said this consistently and persistently throughout the whole negotiations, is that they want time to scrutinise this deal at the committee stage and at the plenary stage. So if a deal is reached, there is a way for the EU to provisionally apply it, and then full ratification would be expected some point next year.
And I know that your work, Georgina, a lot of your research focuses on the engagement and the influence that the UK has in Brussels and will have after the end of this transitional arrangement. A lot of people tell us that financial services is interested in this deal not because of what it contains, but because of what it will mean for the tone of negotiations ahead. For the rest of the UK economy, the services side, the majority of the UK economy, is that why this trade deal matters, do you think, because of the tone it sets for future talks?
Yeah, absolutely. I mean, that's been one of the key concerns of a no-deal outcome. Disruption is one thing, but we know that there's going to be disruption whether there is a deal or not at the borders, because there's going to be new checks and more paperwork and all of that kind of stuff. But it is really the tone that matters. It's that trust element. We know that trust has been dented between both sides over the past couple of years. If you had a no-deal outcome, that would be an acrimonious fallout, and it would make sort of collaborating and cooperating on those areas of mutual interest, next year is a big year for the UK. It's Global Britain in Action. It's going to be hosting the Climate Change Conference. It's going to be hosting the G7. And these are all areas where businesses, but also the UK government, has an interest of working quite closely with EU partners. And of course, a no-deal outcome would make that much more difficult. That being said, I think businesses are used to the Brussels scene. They know how to influence EU institutions. They know how it works. In fact, much more possibly than the UK government, which is going to have to adapt from becoming being a member state for such a long time, and now this transition period, and then going full to a third country where you're no longer part of the EU single market and customs union. And so having those regular conversations, knowing what's going on in the EU will matter, and it will be interesting to see how British businesses operate in Brussels, what information they try to seek, and also the UK government.
Georgina, thanks very much for your time. Georgina Wright, Associate at the Institute for Government. Thank you very much for joining us. 40 minutes into the European trading session, we have success in reopening the border between France and the UK. But what does that mean for supply chains? We're going to delve into that conversation. That's coming up next. This is Bloomberg. Welcome back to the European Market Open. 43 minutes into a trading session that's showing gains of just 0.3%. US futures also point moderately to the upside this morning. Seems as if we're recovering a little bit from the earlier phase of this week where we were very concerned around the new virus in the UK. Now, France has reopened its border with the UK. The move ends a 48-hour closure, which crippled Britain's busiest port and halted trade links. Freight transport should resume this morning amid concerns over fresh food shortages. Over 3,000 trucks have been stuck in southeast England since Sunday. Joining us now is Philippe Binard, Freshfell General Delegate. Freshfell is the European Fresh Produce Association. Philippe, good to speak to you. So what can you report from the front line of this? Do you hear reports of fresh food going to waste, rotting as a result of being held up by these delays for some 48 hours and more?
Well, I think when you look at the direction of the trucks which are blocked, it's from the UK to the EU. I think in case of fresh produce, the movement are going into the other direction. There is about 40% of the UK market which are supplied by European fresh fruit and vegetables coming from different places, from the Netherlands, from Belgium, from France, from Spain, from Italy. And this is done by trucks which move in rotation, which go in the place of production, go to the UK supermarket and return back. The trucks which are blocked are most of them empty, at least for fresh fruit and vegetables. So I think this
right,
has
some of them
made
we understand might be
disruption in the
delivering
supply chain
meat and fish produce. Philippe, let me ask you about how difficult it is to persuade drivers, though, to go to the UK right now. Is that something that your members tell you about?
Yes, well, that would be the next step. First, these trucks have to return back home, and then they will need to convince drivers to accept to go to the UK. There will be also a lot of question about how fast all of this will go, because this is coming in a very particular moment. There have been the situation relating to this new strains of the virus, but there were also a period where there were additional volumes which were going to the UK because of the Christmas period, and there were also a number of additional orders which were made as a pre-Brexit situation. So I think there is a combination of factors which will make the situation very difficult, and there will be indeed a need to convince companies to use their trucks to go there, expecting that they will not be blocked, because I don't think that the 3,500 trucks which are blocked will be immediately moving today or tomorrow. I think it will take several days. So I think this situation will take a few days before being settled, and come on top of the very big uncertainty that we have on January the 1st.
Philippe, you've been calling for a green lane to allow freer movement of fruit and vegetables across the border. Have you had any interest from UK politicians in that suggestion?
Well, in fact, the concept of the green lane started when there were the first blockade with the COVID Brenner Pass in facilities driven to fresh produce, not only fruit and vegetables, but you've mentioned meat, you've mentioned fish product. There is a certain interest in the context of the Brexit discussion to have some kind of green lane channel. For the moment, I don't think there is a concrete advance which has been made regarding fruit and vegetables, but in any case, I think the congestion that we see in the port will continue for a while, and it's very important that we find a solution to have this fast-track solution for moving fresh produce faster into the custom operation.
Philippe, how prepared are your members for the changes that will come on January the 1st or January the 4th, regardless of whether a trade deal is reached? There'll be new paperwork required, new customs regulations, certainly in one direction. How prepared are your members?
Well, I think when we look at the situation today, most of the suppliers to the UK of fresh produce were people which are used to work within the rule of the single market. They are not really specialist exporters. When the UK will be out of the single market, it means that it will mean an export procedure with different custom rules. But I think we talk about that for several months now. The level of preparedness, I think, both from the member states and from the operator has been relatively high. We know most of the rules now. There are still a number of uncertainties, and the main uncertainty being whether or not there will be duty. And I think that could imply a number of things regarding competitiveness, regarding the final price of the product. And I think that would be set into the contract clause between the operator. So I think everything during the next months. There is no reason. I think the UK will still heavily depend from European fresh produce. It's more than 3.5 million tons which go every year to the UK market, and that's represent about 400 to 500 trucks per day. So it's quite an important market, and I think everyone in the EU will try to continue the supply and make as much as possible business as usual.
Thank you very much for joining us, Philippe. Philippe Binard, Fresh Fells General Delegate. Thank you very much for joining us to give us the perspective of European fresh produce producers. Let's get a Bloomberg Business Flash then. Here are today's top corporate stories we're covering here at Bloomberg. CD Projekt is down this morning despite announcing it has already sold 13 million copies of the troubled game Cyberpunk 2077. That figure factors in the number of refunds it's had to issue due to the game being plagued by glitches. Sony has pulled it from the PlayStation Store. Microsoft is offering full refunds as well. Next Digital is trading higher in Hong Kong as its Apple Daily newspaper reports founder Jimmy Lai has been granted bail. He'll be confined to his home and have to report to police 3 times a week. He was charged earlier this month under the city's controversial new security law. The paper is reporting Hong Kong plans to appeal the bail decision. Citi's fixed income traders are likely to see a 10% bump in their bonuses this year. That's as they're set to post their best performance in more than a decade, with revenue up over a third this year. But Citi has to balance that performance with $17 billion that it's setting aside for soaring loans. That is your Bloomberg Business Flash. Coming up on the programme, President Trump demands changes to the rescue plan passed by Congress. We'll discuss what this could mean for markets, or have we done with that already? With the Market Live's Richard Jones. That's next. This is Bloomberg. Welcome back to the European market open this Wednesday morning, 53 minutes into Wednesday's trading session for European equities, up by 0.4%. A slightly risk-on feel this morning, not much though. I mean, the dollar is down though, so that sets us apart certainly from what we saw on Monday and even Tuesday's session. Let's get into the market conversation now. Richard Jones, Bloomberg's Markets Live FX and rate strategist, joins us. Richard, really interesting developments overnight then with President Trump objecting to parts of the pandemic relief bill, or actually objecting to parts of that and also parts of the legislation that have sort of been attached to it and go alongside it. How significant is this, Richard? Because it does seem as if markets wobbled initially, then they've got back into their stride and are sort of putting this to one side. Do you think this could prove to be significant?
Yeah, good morning, Anna. Well, I think markets are a little bit in wait-and-see mode right now. I think a lot depends on what direction the president takes from here. I mean, he used some pretty strong language to criticize the legislation that's put in front of him. And I think if he follows through on not signing this bill, then we could possibly see some material downside in U.S. stocks and in U.S. Treasury yields. I think the market is pretty much, once the bill was passed by both houses of Conference, I think it was almost a foregone conclusion that the president was going to sign the bill. If he doesn't from here, I think that's where it gets interesting. I think the way markets are reacting now is very much with the view that the president will sign the bill, that this might be some saber rattling before an eventual signing. But if he doesn't, that's where I think things get very, very interesting.
Yeah, but less than 30 days, of course, now until the end of his presidency. But still, we watch this story with interest. Richard, the other move we're watching in markets really this morning, the pound, a little stronger once again, 134. But, you know, we've been down to 131 and up to 136, all within, I think that was since Friday. So we've seen quite a range of movements based on the latest Brexit headlines. What's your best hunch? Do you think we're going to get a Brexit deal today or tomorrow?
Well, I think the way the market's trading with the pound a little bit higher versus the euro and the dollar, traders are edging towards or leaning towards the view that, I think we will get a Brexit deal in the coming days, if not today. Having said that, we've been here so many times before, and we've got UK cabinet ministers come out today and said that the negotiations could drag into next week. We've got a French minister saying they mustn't go beyond the end of the year. So D-Day is almost here, and I think the market is cautiously optimistic that a deal will be found. However, as we've seen before, until it's actually signed, we don't have anything in place, and I think we're still in limbo as we await an actual result on that.
Yes. Richard, thank you very much. Richard Jones, Markets Live, FX and rate strategist, joining us there. We were in limbo at the UK-French border, no longer. Live pictures of Dover and Calais this morning. Things slowly
Spanner in the works. President Trump signals he may not sign the COVID-19 relief bill passed by Congress. He calls the $2.3 trillion package a disgrace. France reopens its border, allowing arrivals from the UK's busiest ports. Thousands of trucks remain queued with travelers required to show a negative COVID test result. And the Brexit deal hangs in the balance again as officials talk on. Michel Barnier says that both sides are ready to make a final push. Welcome to Surveillance. I'm Yusuf Gameluddin in Dubai. Just when you thought the pre-holiday trade is going to get a little bit quieter, the surprise pushback from the U.S. President Donald Trump on the stimulus package on the virus relief bill, asking for changes, and that rattling investor nerves initially, but now we're seeing a bit of a relaxed view in some of these risk assets. Let me give you the rundown. Stocks in Europe broadly risk on. It seems almost like the market's waiting for more clarity on the political front, try and get a better idea of what the next legislative steps are. Treasuries a bit firmer. We're studying the German Bund trade. Activity broadly thinner. Some position adjustments before Christmas. The other highlight in the trade is the weaker dollar, down 0.3%. I mean, it does set us up for a volatile year-end session for risk assets more broadly. We did bounce back overnight from the 10-year average on that. And then Brent crude falling for a third straight day. A new report pointing to an increase in U.S. crude stockpiles. That didn't help at all if you're trying to be long oil. Let's get to some of the Bloomberg first word news as well, just to get you that full picture. France is reopening trade and transport links with the UK, ending a suspension that crippled Britain's busiest port at Dover. EU citizens who are able to show negative COVID tests will now be able to travel from the UK. Almost 3,000 trucks have been stuck, threatening a shortage of fresh food. Lufthansa is airlifting some produce into the UK. The Bank of England needs a laser focus on keeping inflation expectations in check after the pandemic. That's after the chief economist Andy Haldane spoke. He warned that if the central bank lets them spike, it will push up bond yields, and that would add to the UK's massive debt burden. He spoke to Bloomberg's Stephanie Flounders on her Stephanomics podcast.
Near term, very near term, the next quarter or two, as the vaccine rolls out, it's going to remain a bumpy ride. Not as bumpy as earlier this year, but bumpy nonetheless, because we see virus cases on the rise, we see restrictions on the rise, and some of that stop-go cycling we've seen this year, I think, will persist very near term.
Israel is heading for its fourth election in 2 years. Its governing coalition collapsed after just 7 months, and that came after failed to pass a budget. The new ballot is set to take place on March 23rd, and polls indicate that a new challenger may be able to win enough support to dethrone Benjamin Netanyahu, prime minister for over a decade. And that's your Bloomberg First Word News. Let's get to our top story. President Trump has posted a surprise video slamming the relief package that's been approved by Congress. He's described the $2.3 trillion bill as a, quote, disgrace, and demanded that there be a larger stimulus payment for individuals.
I am asking Congress to amend this bill and increase the ridiculously low $600 to $2,000 or $4,000 for a couple. I am also asking Congress to immediately get rid of the wasteful and unnecessary items.
Joining us now is Vincent Chegno, who is the head of investment strategy research at Generali Insurance Asset Management. Vincent, a major surprise then for markets. This was not in the script. How much more time will investors allow to pass before repricing some new scenarios for 2021 because of the held-up stimulus bill?
Good morning. Well, the good news is that President Trump wants a bigger stimulus, not a smaller one. You know, Congress agreed on a $900 billion bill, and he wants to increase the checks sent to the people, indeed, and that would increase the package by about $340 billion. So that's even more positive for the economy. Of course, the risk is that we get nothing because remember that the Republicans in Senate are not too keen about that. Initially, they wanted a $500 billion plan, substantially smaller. Eventually, they agreed, but now President Trump wants something bigger. Eventually, I think the Republicans here are really exposed. You know, we have a 5th of January runoff election, two actually, in Georgia. And if the Republicans cannot get their act together, they might be paying the price. The polls are extremely tight in Georgia right now.
So, Vincent, how do I calibrate my investment strategy here on the basis of all these kinds of scenarios that you just laid out? Now, clearly, the president is pushing back. What changes as far as your clients are concerned?
No, I think the market, the way the market is reacting now is that there is still a decent chance that we will get a deal, and if that deal is made, it will be a bigger deal. So it's a bigger stimulus for the economy. So that's why I think the market is not reacted too badly to this news. In any case, I mean, the sooner the better, very clearly. But in any case, you know, after this runoff election in Georgia, let's see what the situation is. But even if a deal is not made before the turn of the year, I think it's likely that in the new year we will get something once we get a new president. So I don't think the market is going to be too worried about this. I don't think this is a game changer actually into the turn of the year.
So does that mean that you would stick with some of the calls for companies that would benefit from rising inflation expectations? So if the stimulus and the virus relief gets front-loaded, that means the scenarios for the first half of 2021 are going to be much more compressed and accelerated, right?
I think so. I mean, the view that we have remains positive for risk assets. My biggest concern is actually sentiment and positioning, which is getting crowded. It's not extreme, but it's getting crowded. But I do believe there is a strong rationale for that. 2021 is going to see a more sustained recovery, and the cyclical stocks, the value stocks that have lagged, should benefit. But again, let me emphasize that the result of the Georgia elections will be very important. If we get a blue wave, which I would say is a 1/3 probability right now, you would get more fiscal stimulus and probably a lower chance of extension duration from the Fed, for example. I think this probably would mean higher bond yields and a stronger rotation towards cyclical. So that election will be important.
Vincent, some interesting ways of looking at these latest developments. Thank you for sharing those insights. We're going to actually resume our conversation shortly. That's Vincent Chenille from Generali Insurance Asset Management. He stays with us. In fact, let's get you a bit of a preview then of what's coming up. France is reopening its border with the UK after paralyzing Britain's busiest port. But with Christmas just 2 days away, how long will it take to clear the backlog of lorries? We're going to get live to Dover to tell the story. This is Bloomberg.
is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get you another Bloomberg business flash. Starting off with Elon Musk. He once again tried to sell Tesla to Apple for 1/10 of its current value. But Musk says that the CEO Tim Cook refused to take the meeting. It came during the darkest days of the Model 3 program when Tesla was burning through cash. Apple declined to comment on the remarks. Citi's fixed income traders are likely to see a 10% bump in their bonuses this year. That says they're set to post their best performance in more than a decade, with revenue up over 1/3 this year. But Citi has to balance that performance with $17 billion it's setting aside for soaring loans. And that's your Bloomberg Business Flash. Critical trade and transport links between the UK and continental Europe have reopened. These are live pictures from Dover, Britain's busiest port, which was closed to freight traffic after France shut its border on Sunday. And that came over COVID concerns. Lorry drivers who test negative for the virus are now allowed to travel from the UK, but the backlog is expected to take days to clear. Appear to be a lot of discussions ongoing there on the ground. Let's get more with Lizzie Burden. She is Bloomberg's UK economy reporter. She joins us from Dover. Lizzie, just give us a bit of a sense of the situation on the ground over there.
Good morning. Yeah, so I'm parked outside Manston Airport, which is a disused airfield, and more than 2,000 lorries are parked here, according to Kent County Council. And this is after days of gridlock. You can really sense the frustration. You can see it on the drivers' faces. There have been queues outside this site already this morning, because, as you say, rail, air and sea services between France and Britain have restarted. The French government's agreed to ease the ban on people entering from France if they can prove they've tested negative for COVID in the past 72 hours. So I understand the military is going to be assisting with the testing here at Manston using the faster but less accurate lateral flow tests, which sources tell us French officials were initially opposed to using but eventually agreed to accepting. France wanted to use the more accurate but slower to process PCR tests, and those will also be valid. But I can see drivers out of their vans talking, smoking together, most not wearing masks, looking quite simply fed up. The Road Haulage Association and other groups have been keen to emphasise the difference from lorry drivers who they say work in isolation with limited contact with others and so have lower infection rates. But all hauliers were told not to head to Kent last night because of the fears of bottlenecks today if the testing can't keep up with demand, and it's still not clear what the testing capacity will be. But the drivers want to get their goods. Many of the goods are fresh across the border before they perish. So to keep the traffic moving, they've got Operation Brock now in place. That's the traffic management system in Kent that was planned for a no-deal Brexit. But it just definitely feels like it's a rehearsal for the Brexit chaos this county's been bracing for at the end of the month. You know, if you remember, the government's worst-case scenario was supposed to be 7,000 lorries queued up. So this is just a flavour of that.
Lizzie, thanks for that. That's Lizzie Burden, Bloomberg's UK economy reporter, speaking to us live from Dover. Let's get back to Vincent Cheneau from Generali Insurance Asset Management. Vincent, so one front appears to have been initially resolved now, although it will take days, if not weeks, to clear the backlog of trucks that are waiting around the port of Dover and elsewhere. Are you seeing perhaps an inflection point here for the UK as we get into 2021?
Well, listen, I do believe that we're getting closer and closer to a deal. I cannot believe that after months and years of discussion, we're going to fail just on this fishing issue. They started quite far apart, where the EU wanted a decline of just 18% in the EU catch in British waters. The UK wanted 60%. Now we're going to end somewhere around 25 to 30%, and there will be discussion in terms of how long that transition towards those new quotas is. But I think eventually we are going to get there. Time is running very short, but I think we will get a deal. And clearly, this is something much needed for the economy on both sides of the channel. We had to face already the COVID crisis. A hard Brexit would do too much pain right now.
Vincent, there isn't a currency that traders are worrying about more than the British pound, at least over the next 2 weeks. This is by the indication of the pound-dollar 1 week implied volatility. So the relative cost to hedge against sterling's decline is the highest among global peers as measured by risks reversals. And that's even more than the Turkish lira. Just for context, nothing short of jaw-dropping perspective. If you were to bet on a particular direction here in cable, which side would you bet on?
No, I think sterling will appreciate, as you say. The market is quite nervous. I think a no deal is now not the central scenario, but the impact indeed would be very large. The market is nervous, but is not priced for a no deal. So clearly, in the unlikely event of a no deal, I would expect quite a sharp decline in sterling. That's not what we expect. We expect a deal, and I think eventually sterling will win. UK stocks also, which are quite cheap, will win from that. But obviously, as I said, time's running short. The market is nervous, and it's wait and see. But I'm rather confident on this.
Vincent, hold that thought. We still have a couple of things to get through. That's Vincent Chenio from Generali Insurance Asset Management. He stays with us. Up next, repair and despair after a tough year for world economies. The conversation turns to Generali Investments outlook for 2021. This is Bloomberg. watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's discuss the outlook for next year in a bit more detail. We all hope 2021 will be a year of repair, but my guest this morning also says that it could be a year of despair. In his research note, he warns of potential growth that could be lower coming out of the crisis. Employment will recover more slowly, and the COVID has fanned inequalities. Still with us is Vincent Chenio from Generali Insurance Asset Management. Vincent, a cornerstone of your research, as I was going through it, really revolves around this idea of real yields hovering around -1%. GTV Go for our clients. You're proposing that the multiples expansion is not even necessary for single-digit equity returns in the United States in 2021. Run me through your thinking.
That is correct. We are looking for a sharp increase, a sharp rebound in earnings next year. I mean, in the region of 40%, 40 in Europe, for example. So as the earnings recover and the forwards earning increase, stock market can go up even without a further expansion of the multiples. I mean, let me be clear, multiples have increased sharply, and they are quite high by historical standard, and this is a matter for concern. But I believe this is not something outrageous in an environment of super easy monetary policy. Let's keep in mind that the balance sheet of the G4 central banks this year increased by about 20 points of GDP. This is something absolutely unprecedented, and there's actually quite a close link between that balance sheet expansion and the equity multiples. So equity multiples are high, but they will most likely stay high, and the earnings recovery will do the job.
You're also quite vocal about the changing landscape around diversification in portfolios, and arguably there are reduced benefits from diversification because we are seeing more correlation, and as a result, some of the hedging strategies become more interesting. What are some examples here that you're sharing with clients?
Yeah, that is correct. I believe that with this new monetary policy setup, we are in a new paradigm. I mean, I hate to say today is different because that's a dangerous sentence when you invest money. But as I said, that balance sheet expansion, those negative real yields are indeed a very strong anchor of cross-asset valuation. I believe that in this new paradigm, central rates volatility is lower because central banks want bond yields to stay low. But you get stretch valuation across asset classes, and that means more frequent correction. And that's where the hedging strategy becomes very important. And even more so that, as you said, the diversification benefits diminish because in the past, through a recession or through risk-off events, rates market, fixed income markets tend to do very well, and this offsets losses in equities. But this time, this is not going to happen. And that's why the hedging becomes very important. And I believe that as equity markets continue to recover, to rise in Q1, volatility probably will pull back. And this will be an opportunity to set up some hedges as sentiment becomes very consensual and positioning very crowded.
Very briefly, Vincent, if I can just interject, if we can just get the core calls at the moment at Generali Insurance Asset Management. So your overweight equities. What about credit? What about some of the other assets?
No, we continue to like credit, but much less so than we did a few months ago because spreads already have compressed a lot. You know, BBB credit corporate bonds in Europe, the BBB index yields about 0.40%. That's not going to generate very, very large returns. So, but we still like credit as compared to govies, and we like to go down the rating scale all the way to BB, where historically defaults are quite low. We also like
Vincent, this has been a terrific discussion. I have to jump in here because that's all the time we have. Vincent Chenio, he's the head of investment strategy research at Generali Insurance Asset Management. This is Bloomberg.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Danny Berger. Over the next 30 minutes will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. More than $720 billion have been piled into global ETFs this year. Bloomberg Intelligence says next year could see $1 trillion of inflows. We'll discuss where that growth will come from. As Tesla becomes the biggest company ever to join the S&P, are passive funds buying it at exactly the wrong time? We discuss the problems of passive. And a bumper year for ESG. But is your green fund invested in oil and gas? We ask if the sector is overrun with greenwashing. First up, let's take a look at which countries and sectors have been attracting the money this week. FFLO Go on your terminal. This, of course, looks at ETFs which track European industries and countries. And this week, so far over the past 5 days, we are seeing net outflows. So that's about $58 million worth of net outflows when it comes to all of the countries. So Germany, by far the biggest loss leader here, seeing nearly $300 million worth of outflows. Interestingly, though, what's sort of saving the European region somewhat are United Kingdom inflows, $72 million there, despite some of the turmoil over the past week. Let's get a take on this. Let's bring in our first guest this morning, James Bevan, CCLA Investment Management CIO. James, first off, thank you so much for joining us. Now, looking at those flows, we're starting to see some of the outflows pick up. Over the past few weeks, we had seen net inflows. What's happening here? Weren't we supposed to still be seeing this value trade that really benefits European stocks and presumably European ETFs?
From a style perspective, I have already begun to see a reversal from the interest in value to the greater pursuit of growth, and indeed the reaffection for technology. And I think this largely relates to the expectation that while central banks and governments remain very supportive of economic expansion, it's inappropriate and too early to call a substantial cyclical upturn in economic activity, which of course would benefit the value names.
How do you square that then with the United Kingdom, UK stocks, which have continued to see inflows? Again, we have Brexit deadlines missed, not to mention London and the rest of the UK being increasingly isolated from the globe.
It's very interesting. The UK has been left substantially behind in the great charge in recent years. And indeed, since the Brexit vote in 2016, the UK economy has suffered and the UK markets have been out of favour. And I think that many investors are now looking at the UK on a like-for-like global basis, determining that there is real value of a small v. And therefore, in terms of portfolio allocation, the best UK companies certainly deserve a weighting in portfolios.
If it's the best UK companies, James, you're looking at, then does it make sense to play this through an ETF? Wouldn't you ideally want to go in and buy individual names rather than the benchmark?
Well, I think it's a very interesting challenge. It's how quickly people can put money to work. And certainly there were a lot of households in the UK that had significant cash balances with raised savings ratios as a result of the COVID-19 crisis, who are now sitting on substantial amounts of cash. And if they want to put that money to work quickly and efficiently, the exchange-traded fund medium is clearly the place to go. And they can then reverse some of those positions and become much more selective in stock names in due course.
That makes sense then, of the idea of ETFs almost sort of as a placeholder. That's something that we certainly see with institutions. But just structurally with UK ETFs, and really any ETF listed in the UK, what happens after Brexit? Is there a danger that we see some structural oddities once the trade agreement, whether it happens, whether it doesn't? What's sort of the worst case scenario we could see there?
I'm not anticipating there will be indigestion for the exchange-traded fund industry as a result of Brexit. The finance industry has been well aware of what lies ahead in any form of Brexit deal. And indeed, most of the talk on Brexit has been about trading goods rather than services. So the financial sector has recognized it needs to be on top of its game, both in terms of the underlying management of assets, but also in the structuring.
James Bevan, CCLA Investment Management CIO, stays with us. Now, coming up, Tesla becomes the biggest stock ever to join the S&P 500. So are passive funds buying at exactly the wrong time? We'll discuss that next. This is Bloomberg. This is Bloomberg ETF IQ Europe. Everything you need to know about the funds and the flows. I'm Danny Berger. Now, just this week, Tesla became the biggest company on record to enter the S&P 500. A group of investors, though, are asking, is this a buy signal or is it just a bubble? Fans of smart beta argue that market cap-weighted indexes suffer because they tie their fortunes to big and bloated companies. Rob Arnott, really one of the godfathers of smart beta, points out that Tesla has run up 800% from the March lows. And now you want to add it? James Bevan of CCLA Investment Management is still with us. James, I put Arnott's argument to you. Are passive holders of the S&P 500 essentially now owning Tesla at exactly the worst time?
Well, a share price, of course, reflects the consensus expectations of discounts the future value of a company. So it's wrong to say that an equity is absolutely overpriced. What is clear, however, is that a capitalization-weighted index requires you to overweight the most overpriced companies and to underweight the most underpriced companies. But that's, of course, with the benefit of hindsight. And right now, there are clearly many investors who are betting that Tesla is going to become more substantial, more successful, and a bigger player in indices in the years ahead. And therefore, it's a moot point. It's a debating point of huge significance as to whether this is the right moment to back Tesla or not. That said, it is equally the case that there are plenty of exchange-traded funds that would allow people to have exposure to equity markets on different bases than capitalization weighting. And indeed, Robert Arnott himself has run ETF-type indices that are based on fundamental characteristics rather than stock capitalization.
Right, right. Yeah, I mean, a lot of smart beta funds have come out of research affiliates from Rob Arnott. But one of the really alarming stats or interesting stats that I think comes out of this research, he says that exits from the S&P 500 outperform new entrants by 24% in the span of 12 months. I mean, that does seem like a lot of returns that passive investors, specifically market cap weighted ones, are missing out on.
Well, and equally, however, in the long bull market, staying in an index and minimizing turnover was absolutely the right way to make money. And those who chop back profits on the companies that were doing well, very often the active pursuit costs them money. So I think the debate is out. And investors, what they have to do is to think philosophically about what suits them, to determine the best strategy they have for achieving the returns that they require. And then they need to have the courage of their convictions, and they need to stay. Worst thing that investors can do is to sell at the wrong moment or indeed buy at the wrong moment. But over the long haul, a strategy that is reasonable, that is sound, that is based on fact, typically will pay off.
So I know, yes, you're sort of speaking to this big picture-y argument about market cap weighting, but is there anything specific about Tesla? I mean, it's now going to be the third most volatile stock in the S&P 500. Does it change the calculation of owning S&P tracking funds?
No, I would say it does not, because after all, we have had many companies that have been in the S&P and people have said, oh, wow, these stocks are very expensive. And I would have said for the last few years, many people have been deriding the so-called FANGs as overpriced. But actually, if I look at the performance of, say, Alphabet, the owner of Google, and I compare that with Domino's Pizza, Domino's, interesting, floated originally an IPO at the same time as Alphabet and has delivered superior returns, but it's done so by gearing its balance sheet. Alphabet has held cash. Alphabet, therefore, could have reported twice the earnings that it reports at the moment by gearing its balance sheet. And those who are prepared to stick with the story, I think, are those who are going to make the most money. And indices do that for you.
Well, James, quickly here, do you think that non-market cap weighted indexes are a better option or no?
Oh, absolutely, I do. I think that anything that breaks the cycle of having to buy the most expensive and not to own adequate weightings of the least expensive has got to be recommended. So I'm absolutely up for style tilts and for non-cap weighting.
Style tilts, non-cap weighting, maybe more value in the future. James Bevan, thank you so much for joining us, CCLA Investment Management CIO. Now, coming up, ESG has had a bumper 2020, but could your green fund be invested in oil and gas? Certainly something that's not very green. We'll discuss a report that accuses the sector of greenwashing. That's coming up shortly. This is Bloomberg.
climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Danny Berger. Not many investment categories can boast that they had inflows during every single month of 2020, but green funds kept getting inflows even during the pandemic sell-off. UK-based campaign group Commonwealth says investors may be surprised, though, to find what's inside the wrapper. According to their analysis, 12 climate-themed funds, so that's about a third of what the company looked at, hold oil and gas stocks. Are investors being duped by greenwashing? Joining us now is Raphael Stern, Invesco Asset Management Head of EMEA PM and Global Head of Fixed Income, ETF, and Index Strategies. Raphael, I put that question to you. Is greenwashing a really big issue when it comes to ESG ETFs?
Hi, Danny. Good to be here. I don't think it's an issue. I think, as with every investment product, investors have to do their due diligence and their research to understand what they're really buying. And with ESG in particular, not all ESG is equal. What I mean by that is some investors have a really strict and specific view on what their ESG opinion is, meaning they are extremely strict in what industries they exclude from the get-go. And then there are some more, I should say, loose criterias that are a bit more highly correlated to the broad benchmarks. So it really depends on what you're looking for.
I wonder if one of those loose criteria, Raphael, is something like technology. This is something that the report points out, that big tech companies, for example, contribute a lot to climate change. Is that, for example, something that doesn't belong in a clean energy fund or just a ESG fund?
Yeah, I mean, you can make an argument about pretty much anything that it has some sort of negative impact on the environment, but at the end of the day, you also need to have something to invest in. So I think there is a lot of positive momentum-focused approaches that are kind of the ESG 2.0 version of funds that have very smart methodologies and approaches to find companies that actually contribute to solving some of the environmental problems. Now, none of those have zero negative impact on the environment, but they are positive contributors. So I think the future of products will be about finding and identifying those smarter ESG methodologies.
That seems really complicated for an investor, though, if they have to wade through all these ESG products. How do they find what you say is sort of the smarter way to go about investing in it? How do you sort of sort through all of these different fund offerings?
Yeah, that's a good point. And I think it's very difficult to do this as an individual investor buying underlying securities independently. I think buying a wrapper such as an ETF can leverage the scale of large institutions that have the capabilities to do that for investors and to communicate that to investors in a readable and manageable format.
What about fixed income, Raphael? Is there a lot of work to be done in terms of ESG fixed income ETFs?
Yeah, absolutely. I think it's one of the fastest growth areas for next year and for the coming 2-3 years. There's only 44 fixed income ESG in UCITS out of over 400 overall fixed income ETFs. So there's a lot of work to be done. We've had about $7.5 billion of inflows this year to date. Last year, there were only $2.5 billion of inflows. So we've tripled the flow rate into this area. And I think going forward, we can see that multiplier even go higher.
Triple, we'll have to see what it does in these next few years. Raphael Stern of Invesco Asset Management stays with us. Turning now to one of the hottest areas of ETFs, thematics. They track categories like pet care, sports, or even remote working. Now, one of the biggest players in the U.S. has entered the European market. New York-based Global X has launched 2 new products on the London Stock Exchange. Let's get more now with Bloomberg's Ksenia Galuchko. Ksenia, Global X obviously very successful in the U.S., so why would they spend time, money, energy now trying to enter the European market?
Hi, Danny. Yes, so it makes sense. So they're entering the European ETF market because it is the world's second largest after the U.S. and it's growing rapidly. Just to give you an idea, the assets of the European ETF market have grown to about $1.3 trillion this year. Of course, it's still a fraction of the U.S. market's $5 trillion, but it's still considerable. Now, I've spoken to the CEO of Global X, Luis Biruga, and he told me that he's expecting the European ETF market to triple within the next 4 to 5 years. So it's a chance for them to tap a fast-growing market that isn't as saturated or competitive as the U.S. one. But at the same time, of course, Global X will face tough competition because most global top players like BlackRock's iShares, Vanguard, Goldman Sachs are already present in the European ETF market. So it is quite a competitive space. But Global X is quite ambitious, and they plan to roll out between 5 and 10 ETFs over the next year, the CEO told me.
If we already have these big players, Ksenia, and they're planning to roll out, as you say, 5 to 10, is there enough demand there to absorb these new thematic ETFs, which will come to market in Europe?
Oh, yes, for sure. So there's a lot of interest for thematic ETFs. And just to give you an example, assets in American thematic ETFs have swelled to over $100 billion this year. What's happening there is that retail investors are buying these easy-to-understand ETF products that they can really relate to. So be it ESG ETFs, cybersecurity, or even marijuana ETFs. So Global X is starting out in Europe with 2 funds, and they're focused on video games and on telemedicine. And the CEO told me that they picked these topics specifically because these industries saw a surge in demand during this year's pandemic and lockdowns. And also, just to give you an idea, thematic ETFs are a market segment that Global X is truly competitive in, and they can add real value. So they were a pioneer of thematic ETFs in the U.S., and now they're trying to capitalize on the popularity of these products among European investors. In terms of flows, I was just looking before the show, ETF flows in Europe, thematic ETFs have been attracting $7 billion just this year alone.
Right. Right. Well, we look at that a lot, Ksenia, and we see that a lot of that also ESG. So interesting to see that element play in there. Bloomberg reporter Ksenia Galuchko, thank you so much for joining us. Raphael Stern of Invesco Asset Management is still with us. Raphael, is this where we're about to see just a lot of competition? Is this about to heat up a lot in this sort of arms race for getting out these sorts of ETFs?
Yeah, absolutely. I think we're in the middle of that already. And I'm not surprised to see U.S. players looking to enter the European ETF market. Now, in terms of thematics, of course, we've seen about 10% of flows year to date into this category. So about 11 billion so far. We've seen a lot of flows on our own funds, such as the blockchain ETFs, as well as NASDAQ Biotech. So we're well versed in that segment. I think it's going to be a tough entrance for a new player who only focuses on thematics, because in the US, retail investors are the primary ETF users who like those kind of funds. And in Europe, you have a lot of institutional and non-retail investors that are buying ETFs directly. So there's going to be some adjustment to be taken into account.
Are there any gaps, though, that could be of interest, that there is a lot of institutional interest in Europe that would be a good area for Global X or even Invesco to offer?
Absolutely. I mean, there's insurance, there's pension, and other institutions that are just now starting to adopt to the use of ETFs. So there's an absolute market demand there. And there's certainly, given that there's thematics, there's almost an unlimited number of themes that you can come up with, which obviously change as technology evolves, as various businesses change. So I think we're going to see a lot of innovation in the space. You will have a mix with ESG on top of thematic benchmarks, and investors essentially decide which ones survive.
Rafael, I know we were just talking about ESG and fixed income, but what about some more of these more odd, more sort of out there thematic in fixed income? Is that something we could see more of?
Yeah, I think there's obviously there needs to be investor demand. So when we think about new products, we need to find a demand first, and then we think about how to best implement with liquidity in mind. And in fixed income, if you ignore liquidity, you're going to run into problems once a product starts to take off. So I think there's going to be certain limitations as to what we can do to make sure a product is implementable. But having said that, there are certainly a lot of areas that are of interest to us, and you will see a lot of innovation coming from Invesco.
I do feel like bond ETF liquidity is something we're constantly worrying about. In this space, or really beyond, are there really any products that investors should be wary of because of underlying liquidity issues?
Yeah, I think there are certainly index design that has to be taken into account. And if you have a concentrated benchmark in illiquid securities, you may run into problems if you have starting to have a very, very large product. And market conditions like we've seen in March, April are a testament as to which products are able to survive that kind of volatility. So we take the product design and benchmark development very seriously. We have turned down some ideas that sounded great on paper, but were not practical from an implementation and liquidity standpoint. So I think every issuer has a responsibility to make sure that what they believe is a good product is actually also good for investors.
Right. Well, not only did they survive the pandemic, they also thrived. We saw a lot of flows into fixed income this year. Rafael Stern, thank you so much for joining us. Invesco Asset Management Head of EMEA PM and Global Head of Fixed Income ETF and Index Strategies. That's it for this week's Bloomberg ETF IQ. We'll be back with more next Wednesday at 9:30 a.m. London. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, send me a suitable bill or else the next administration will have to deliver, and maybe that administration will be me. Trump stuns Mnuchin and McConnell with a gift for Pelosi. He will not sign a $900 billion deal. He wants it to be $1.2 trillion plus. And now the Georgia elections are in 13 days. This morning, markets churn, equities lift, and Macron blinks. Meanwhile, call it the Merkel plan. Lufthansa will airlift vegetables to London this Wednesday. Good morning, everyone. Bloomberg surveillance from New York, London, Berlin, Washington, and points in between. Lisa, you take the surveillance early to bed at 7 p.m., and you wake up truly to the edge of chaos.
Yeah, it's interesting. The headlines would suggest the edge of chaos, and yet if you look at markets, as you said, there's even a lift. People shrugging off and perhaps out of exhaustion of these last-minute tweets that might upend discussions, believing that there will be something struck.
This was more than a last-minute tweet. We have so many stories. It's supposed to be quiet today. I've got to start my Christmas shopping. Go get the Christmas beast.
The
Forget
Christmas
about
McDonald's.
Yeah, McDonald's, exactly. Number 2 value meal. Could we get that, please, with the apple pie?
Merry Christmas.
This is unreal, folks, and we've got a team of people around the world. Leslie Vinja Murray will join us here in a moment. For those of you, we have a story in the United Kingdom. For those of you over the pond, Washington is historically in chaos. And Lisa, as you mentioned, and you mentioned this on Twitter, corporate yields at all-time narrow.
Well, this is the thing. It's risk on. It's melt up, even if you get the threat of a lack of a funding bill and a suspension of the U.S. government, even if temporarily amid the worst pandemic in a century.
It will be an entertaining morning. With our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Lisa. Now President Trump is signaling he might not sign that massive coronavirus and spending bill passed by Congress. Last night, the president called the bill a disgrace and said it's filled with wasteful and unnecessary items. He demanded that Congress increase the stimulus checks going to most Americans from $600 to $2,000. And President Trump handed out a number of pardons, including one to a former campaign aide convicted in the Russia investigation. George Papadopoulos was convicted of lying to the FBI. The president also pardoned former California Congressman Duncan Hunter, who pleaded guilty to misusing campaign funds. Another former Congressman, Chris Collins, was pardoned after pleading guilty in a securities fraud case. France has agreed to reopen its border with the UK. That comes after a suspension that crippled Britain's busiest port, Dover. French authorities say EU citizens and residents able to show negative coronavirus tests will be able to travel from the UK. Plus, officials hope to have freight traffic moving this morning. Israel and Prime Minister Benjamin Netanyahu are headed for their 4th election in 2 years. The country's governing coalition collapsed after just 7 months over a budget crisis. The vote is set for March 23rd. Both Netanyahu and the leader of the opposition Blue and White Party, Benny Gantz, enter the campaign badly weakened. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. With this news flow, a quick data check. Not much going on in the markets. I would note VIX 23.27 continues to come in, and as you mentioned, Lisa, equities lift.
Yeah, and what's interesting to me is you can't keep a good consensus down. We're getting the dollar weakening yet again. We're getting Treasury yields kind of doing nothing but blipping upward. And Russell futures, basically the rotation into cyclicals, still good, even though we don't necessarily know what's happening with this fiscal support bill, Tom.
If you are a student of American history, I would urge you to see the Trump video of last night, 8-ish in the hour, in its entirety. It's about 4 minutes long, and it is truly an historical document for this nation. Here is the president.
I am asking Congress to amend this bill and increase the ridiculously low $600 to $2,000 or $4,000 for a couple. I'm also asking Congress to immediately get rid of the wasteful and unnecessary items.
Excuse me, I was cut off there. I'm still dealing here with the entirety of that, and the line item idea of everything that he requested is inappropriate, including foreign aid. Sorting this out Leslie Vinjamuri, we're thrilled on short notice, could join us this morning from Chatham House. Leslie, what is the power of the presidency?
Well, on this, it will be very interesting to watch because, of course, he's wading in essentially on the side of the Democrats and against his own party, calling for a lot more money at very short notice. After many months of this being the most difficult agreement to strike, and on the eve almost of Christmas with the December 28th deadline. So this is quite extraordinary. I think this is a president who's looking for friends, who wants to shore up his popularity. He's clearly losing the support now of the Senate Republicans who have recognized the election of Vice President Biden. So he's grabbing at straws, but it is a very interesting move and not one that I think his own people will have been anticipating.
Exactly, not anticipated, and kept extremely quiet up to that 8 o'clock-ish release that we saw last night. Leslie, not so much the parlor game of Washington and what the response will be. We've already seen some responses to this. Can he get this done? Is your basic gut reaction with all your experience that he can actually pull off these requests?
Look, your guess might be as good as mine, probably better, Tom, but I would be very surprised if he's able to pull this off. The Republicans have made it very clear that they didn't want to go higher on stimulus. They've fought for a very long time. Nancy Pelosi, as we know, is all in, saying she'll call a vote on the House floor on Thursday to approve those higher checks. Certainly many Americans will be supportive, but very difficult to imagine how the Republicans walk back and agree this on such short notice, and again, leading right up to Christmas.
Yeah, well, Leslie, we're meanwhile just days away from the Georgia election, and people were saying that this fiscal support bill would actually give Republicans a boost in that runoff contest. What does this do, President Trump weighing in against his fellow Republicans due to that race?
That one, again, very difficult to predict. I think the first thing is that people will want to see that one way or another, a bill is passed, that it doesn't hold up unemployment benefits, that it doesn't hold up, evictions are on the table if a bill isn't passed, a moratorium on evictions, and let alone also those vital stimulus checks. People want to see government working. Who will they blame if it doesn't? I think in this case, it looks like they would blame the Republicans, since it's the president who's calling it out. Are there some people who it might play to the president asking for more money for them? Certainly, but I think those are people that were already going to vote Republican in that race on January 5th. But I think, the bottom line is unpredictability, instability, failing government. That is not what people want to see. And I really do think at this point they would blame it more on the Republicans.
In the spirit of just a clarifying fact from fiction, President Trump was talking about wasteful and unnecessary items. He was talking about foreign aid and a host of other measures within this bill. Again, this is a $2.3 trillion bill, including $1.4 trillion to fund the government. From your assessment, how much is truly waste versus just necessary financing plus the additional financial support in light of the pandemic?
This is a really complicated maneuver. Obviously, they pulled a linked to spending bill, the COVID stimulus bill. There's all sorts of things in there. What's waste has everything to do with where you sit in the American polity, where you sit in Congress. So really tough call to make. But of course, the president can legitimately, from his perspective, call out certain things as waste, because so much has been put into that package.
Dr. Vinjamuri, the heart of this and part of the charm of this president from day one is clearly he doesn't understand the Washington political system. For that matter, I don't think he understands the London political system. And it goes back to something as basic as core knowledge in elementary school, and maybe it's Unit 8 with 31 lessons as well. Is this a question of presidential ignorance, or is it a question of presidential shrewdness?
I think it's neither. I think this is a president who doesn't care. He doesn't like what's happening right now. His own party has moved against him in his eyes by not continuing the fight against, the legitimacy of the electoral results. Mitch McConnell has turned he's losing out. He's got days to go. And it's a popular move, right? This is a populist president. It's a popular move to say that Americans will get more.
I mean, Attorney General Barr, I believe today's the day. He's out the door. The news flows so much, folks, we haven't even focused on the exit of Mr. Barr. Does Mr. Mnuchin resign over the actions of last evening?
I suspect not. We'll have to wait and see. But no, I do think he'll be having an interesting few hours trying to work out how to take this forward. He doesn't strike me as a resigning type, but one never knows in this.
Leslie, thank you so much on very short notice to join us today. Hugely, hugely valuable at this historic moment. If you're just joining us, particularly for an Awakening America, the president with a bombshell, there's no other way to put it, last night in the 8 o'clock hour, a 4-minute video simply saying the stimulus bill is unacceptable. A great assumption that it will move markets. Lisa, do we see that now?
Well, if anything, markets are going up. I don't know if this is just because you can't keep a good consensus down, or if people are looking at President Trump's Twitter post and video and saying, well, if anything, the bill will only get bigger, or if something isn't agreed upon now, we'll get a Democrat winning the Georgia elections, and then you'll get a bigger fiscal support bill next year. The question is, again, what is the damage done in between if there is not necessarily a stopgap measure?
In the math, and I thank the Washington Post for the paragraph on this, I believe from Tedeschi of the Obama administration, 900 gazillion, you add on 370, so I'm going to call that 1.2 trillion plus, and as many people have emailed in, I'm wrong on that because the president assumes we will cut programs, Lisa. I believe the first one he mentioned in the video was aid to Cambodia, but he looked at all the so-called pork in the bill, and I guess he wants to bring 1.2 trillion down.
Honestly, the thing is, he wasn't part of the discussions or the negotiations at all. This came as a surprise even to his own aides, according to reporting in the Wall Street Journal and beyond. And really the question is, what next, and do we get a bill at all?
We have some wonderful guests lined up through the morning, not only these topics of Washington politics, but of course all that's going on in the United Kingdom and across the Calais and Dunkirk. Macron basically blinks is the headline for those of you watching the trucks backed up in Dover. We'll also look at the pandemic. We will look at the virus. The FDA commissioner scheduled to be with us in the 8 o'clock hour. Thrilled that Dr. Hahn could join us. This is Bloomberg, an extraordinary Wednesday. Tons of economic data at 8:30. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon. You need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
And when it comes to the monetary side of our mandate, absolutely crucial. If we enter that, the sunny uplands next year, the recovery next year, that there is an absolute laser focus on our core inflation mandates. Because absolutely the last thing the world needs right now is a nasty inflation surprise.
That was Bank of England chief economist Andy Haldane speaking to Bloomberg's Stephanie Flanders on her Stephanomics podcast. We have been watching the pound sterling as a harbinger of what might happen with respect to both Brexit as well as the broader European economy. Today, you're seeing strength. Some people saying don't even try to trade it. It is basically an emerging markets currency. Joining us, someone with vast experience, Valentin Marinoff, Credit Agricole, head of G10 FX Research and Strategy. I want to start on sterling because it's been such a volatile story. And this idea of what's the main driver here? Is this just risk on, risk off more broadly? Or is this pegged to some sort of predictable development within the United Kingdom?
Well, good morning. I think it's a little bit of both. The pound has certainly been positively correlated with risk sentiment over the years, I have to say. But in addition, on the day, it certainly highlights that investors continue to hope for a successful resolution of the Brexit drama. Really, the grand finale is upon us. And most clients we talk to, the various surveys we have conducted, are suggesting that an overwhelming majority of our clients do expect reason to prevail and that we have a Brexit deal at the end of this year. From that point of view, the pound is still seen as a buy on dip, something that we are seeing in the price action, and something that will continue to keep the currency supported, irrespective of the noise really that we continue to face coming out of Brussels or London. And
Valentin, in all, with all due respect, I was reading this headline this morning: Brexit deal hangs in balance as negotiators push for the line. It struck me as an evergreen headline. This could have been written a year ago. This could have been written 2 years ago. I mean, we've been dealing with the same story, and we're almost there basically every day. I mean, at what point is it a fool's error to even try to trade this? I mean, how can you even have a call on something that fluctuates on the same headline, basically in contrast, back to back?
No, it's quite an interesting point you're making, and it seems like that the markets have adapted in an interesting way. In the spot market, as I was highlighting, people continue to buy the dip. However, at the same time, in the options space, we do see demand for downside protection. In a way, or one way of describing that particular strategy is hope for the best, plan for the worst type of approach towards Brexit. And again, I do believe that most of the majority of the investors community do hope for a deal, but equally they are conscious of the fact of the potential risks involved. So there is a way of trading that, and I think that the markets continue to approach in that particular way. And that also means, just purely from a trading standpoint, that a lot of positives are already in the price of the currency, meaning that even if there is a deal, right, cable could surge back to 136 or potentially a bit higher, but chances are that this much will be already in the price. We'll be capturing the Brexit deal. So the risk is then that ultimately the rally will run out of steam, especially as focus shifts now to the weak economy, to the prospects for further rate cuts by the Bank of England, and so on and so forth. So the real trade here could be just shorting sterling vol. At the same time, we think that not much is going to happen on the FX spot side.
Valentin, on a quiet morning in FX, I noticed continued renminbi resilience. Do you call for the Chinese yuan to be ever stronger in 2021?
That's one of the themes we have in mind. We think dollar renminbi could well revisit the lows from 2018, which is 620, and part of the story there will be the cyclical recovery and the role of the dollar as the most important counter-cyclical currency. In other words, we do expect that as global trade continues to recover, a growing proportion of the dollar export revenues that the Chinese exporters are now amassing will be converted into renminbi, as they have to pay suppliers, pay salaries, and so on and so forth. Into year end, what we've noticed is that those particular market players have been hoarding dollar cash, because of refinancing needs and so on and so forth. But into the new year, assuming global trade continues to recover, I think that cyclical driver will play out as a big dollar-yuan negative.
Oh, this is going to be fascinating. A 620 yuan is really something, folks. I'm looking at the chart here real quickly, and that goes back to 2015 to say the least of renminbi strength. Valentin Marinov will continue with us with Credit Agricole again. Let me reset the markets for you, and they advance, as Lisa mentioned. Futures up 12, Dow futures up 94, and the VIX comes in a full stick, 23.16. Very important to see the lift in equities. We do not see so much correlation, even in bonds, quiet. As I mentioned, FX quiet with some dollar weakness, but all in all quiet. And I'd note oil, $50.14. So it's called a December 23 tape. There is a lot of economic data beginning at 8:30. At 12 noon today, without question, our interview of the day for America, Anthony Fauci. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
A sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Bloomberg's learned that Pfizer is close to a deal to supply more vaccine doses to the U.S. government. The agreement could result in the government getting up to 100 million more doses. There have been reports that the US declined an offer earlier this year to buy more of the shots. And Elon Musk says that years ago, Apple CEO Tim Cook refused to take a meeting to discuss buying Tesla. Musk indicated the price would have been about $60 billion, roughly 1/10 of its current value. Musk says he reached out to Apple in what he called the darkest days of the development of the Tesla Model 3. Apple's not commenting. A movie theater operator Cinemark is suing its insurer for refusing to cover $400 million in losses and legal expenses. The money is linked to the coronavirus pandemic. The third biggest U.S. theater chain says Factory Mutual Insurance failed to honor Cinemark's policy. The movie theater business has been devastated by the pandemic. Factory Mutual isn't commenting. And that's your latest Bloomberg Business Flash. Tom?
Ridika, thanks so much. Well, maybe stimulus larger, as Lisa Abramowitz mentioned. So what do you get? You get equities up. Futures up 12, Dow futures up 89. And I'm watching the VIX more than anything. It is a jump condition this morning in a stick. 23.18 on the VIX. Lisa?
Yeah, Tom, just to speak to what you were saying, it's a glass half full morning. Bad news is good news, and you end up with the Russell 2000 outperforming yet again, up nearly 0.6% outperforming large caps. Just again, highlighting bonds doing nothing and the dollar weakening yet again, copper surging. It's just amazing how, again, bad news, good news, no deal equals bigger deal later, and everybody's throwing their hat in that ring. Coming up on Balance of Power, Max Baucus, former U.S. ambassador to China and former U.S. Senator of Montana. This is Bloomberg.
Manage your debt. Things they didn't teach you in school, part 4. When we think of debt, we often automatically think of a horror film. But debt doesn't have to be the scariest thing in the world. If you found yourself with some debt that's stressing you out, here's how you can manage it. First, prioritize your payments and pay down the debts that are costing you the most. How do you find that out? Look at your interest rates on your monthly billing statement. If your credit card has a really high interest rate, you'll want to pay that off before paying off something like a student loan, which might have a low interest rate. The average interest rate on a credit card is 14.5%. So you're getting a good return on your money when you pay that debt off. Next, track your spending. Stick to a budget so you can know where you stand financially and start to save some money to pay your debts down. You can do this with apps like Digit, Acorns, and Stash. And lastly, breathe. Know that every financial mistake is fixable. You can always recover down the road, but it's best to get ahead of any mistakes that could lower your credit score. And a good credit score can save you a lot of money, earning you a lower interest rate in the future.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
is Bloomberg Surveillance live from New York. Lisa Abramowitz alongside Tom Keene. Francine Lacroix is off. We are heading into a new year. We're almost done with 2020, I promise. I keep saying that to myself every morning. And there is a new alliance with Janet Yellen poised to helm the Treasury Department, the former Fed chief, working in tandem with Jerome Powell of the Federal Reserve to try to reignite a beaten-up U.S. economy. The question really, what does this mean for the dollar? Valentin Marinoff still with us of Credit Agricole. What's your sense, Valentin, of the implications for a dollar of a Fed chief and a Treasury secretary arguably working closer than ever before to try to reignite some sort of growth?
I think that at least initially that should be dollar negative. Fact being that where the Fed and the Treasury could work together, they will definitely try to restore the U.S. economy back to health, back to more normal conditions, and fully conscious of the limitations that the Treasury now has to work in isolation, given the gridlock Congress that we will likely have next year. So that may mean that the Fed will be more activist and will be working more closely with the Treasury, which could result in potentially even lower real rates, real yields in the U.S. The Fed is also trying to deliver on its average inflation target. So the dollar or weaker dollar could be a big part of that. There is still hope that weaker dollar could help really at least partially kind of address the current account deficit issue that the U.S. facing. And so long as the U.S. is not facing any difficulty really attracting foreign inflows on the back of concerns about deteriorating fundamentals or indeed, for that matter, very weak dollar. So long as that is the case, some further controlled depreciation of the currency may be the preferred really option for both the Treasury and indeed the Fed in coming months and quarters.
Which would be an interesting divergence from the past, where the U.S. has traditionally had a strong dollar type of policy. You mentioned negative real yields. I'm looking right now. Tom has been mentioning this all week, rightly so. Negative real yields, negative 1.04% on the 10-year if you basically take away inflation from the actual yield. How low could we go in the United States with Fed backstopping the debt markets?
Well, we believe that we could go a bit lower still. Our forecast for nominal Treasury yields is that they're going to be quite stable, around 1% or just below 1% for a foreseeable future and into well into 2021. And with the inflation now expected to recover gradually, that could actually give you even lower 10-year Treasury yield compared to current levels. It is also important that this much from a dollar standpoint, obviously what matters is how this compares with real yields outside of the U.S. That's not going to bode well for the dollar because real yields elsewhere could actually fare quite favorably with the real yields in the U.S. and could translate into further dollar weakness. And that may well be by design because, as I was saying, the Fed is indeed trying to refuel really the U.S. inflation and ultimately deliver on its average inflation target.
Valentin, where's a trade right now? Where's a trade? I mean, Bloomberg writing up the carry trade today. Where's the intelligent speculation right now?
Well, intelligently, any speculation, but I do believe that short dollar against the so-called pro-cyclical currencies still makes a lot of sense. Fact being that I was mentioning that earlier, the trade flows that could result into weaker dollar are still to come. Our own data is not showing necessarily that corporates around the world have started selling the dollar in earnest and have been hoarding the dollar for a long period of time. Something that's quite unusual. So you would think that euro dollar at 125 or indeed dollar renminbi closer to 620 could be still on the cards, if only because those flows are still to play out really as a major market driver. Beyond that, I do believe that notwithstanding the risks going into the year-end, government shutdown in the U.S. or indeed no trade deal Brexit, notwithstanding that, we are heading to a much better year in 2021 than we had in 2020. Well, so this much should ultimately support carry trade. It is, I mean, you mentioned that, but I do believe that the likes of yen and Swiss franc should ultimately come off the boil, and these could make a very interesting short on their own in their own right.
We're going to leave it there. That's way too much good news. Valentin Marinoff, thank you so much with Credit Agricole and head of their G10 FX Research. Futures up 12 with our first word news. In New York, here's Ritika Gupta.
Thanks, John. President Trump is complicating the outlook for the coronavirus stimulus bill passed by Congress. He is signaling he may not sign it and is demanding changes. One of them increasing the size of the checks going to most Americans from $600 to $2,000. The president calls the bill a disgrace and says it's full of wasteful and unnecessary items. Meanwhile, Joe Biden warned that the darkest days of the coronavirus pandemic were still to come. The president-elect called on Congress to be ready to produce another stimulus package early next year, but he's not putting a dollar figure on it. Biden has lashed out at President Trump over that major hack of U.S. government agencies and companies. The president-elect blamed the Trump administration for not taking cybersecurity seriously enough. Biden also called on the president to publicly identify the culprit, saying it's widely believed to be Russia. A post-Brexit trade deal hangs in the balance, with fishing rights still the key issue. Prime Minister Boris Johnson and European Commission President Ursula von der Leyen have intervened. They're making a last-ditch bid to reach an agreement before the UK leaves the single market at the end of the year. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Lisa Tom.
Thank you so much, Ritika. Coming up, we can only hold our breath and see what happens. That was Alan Wilson, head of the Institute of Biomedical Science, talking about this new strain of COVID and what it could mean about the number of cases. From New York, this is Bloomberg.
Lo tomé como una terapia. Realmente logró la contención que yo necesitaba en ese momento.
How have you changed as a leader since that day in 1993 when you joined Roche?
You develop over time, and it's a series of experiences which hopefully make you a better leader.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Good morning, everyone. Bloomberg Surveillance. Tom Keene, Lisa Bramwell. It's really an extraordinary day. No other way to put it. Futures up 12, down futures up 79, in a stick on the VIX 23.24. But the news flow out of London, out of Paris, and then last night out of Washington on the president's stimulus, extraordinary. It is a backdrop for a grim December. The president-elect speaks of a dark future forward. When we look at the pandemic, and we'll be touching on this through the morning as well, as we've done from the day one when we started this, we speak to experts in cellular pathology. the study of cells and the study of what these diseases do to us. Alan Wilson is at the head of the line. He is with the Institute of Biomedical Science. He is truly one of the world's experts on cervical pathology, and we're thrilled that he could join us this morning. Alan, what do you know about the cellular pathology of this virus that you did not know in April?
Good morning. Yes, it's interesting. This virus obviously is capable of mutating and changing, and I think that's what we're now starting to learn. It's natural selection in its purest form. To a certain extent, this virus mutates a lot because it replicates a lot, and therefore it will change. Most of those changes will mean very little to us, but what's happened more recently in the southeast of England is there seem to be a significant number of mutations in the virus, and that has changed its behaviour. The perception now and the science is still not there yet, but it appears that this virus is more likely, more able to spread more quickly. It doesn't seem to offer any more risk clinically in individuals that catch the virus, but certainly it seems to spread, and its transmission rate has gone up compared to the original version of the virus.
Still a mystery, Dr. Wilson, is the virulency, the strength, the power of this virus. On a relative basis, where does the COVID virus fit in for just being mean and vicious?
It certainly has a very high fatality rate compared to any other virus that we've seen more recently, and that's because of the impact mainly on the respiratory system, and because of our inability yet to have methods to treat patients while they're developing. We're getting much better at them, but at the moment there are still, if you are in the high risk categories, if you catch this virus, it is not good news, and that's why the fatality rate is so high. So on the scale of other viruses we've met, at the moment it's a pretty nasty one. But in years to come, it will emerge into, and effectively we'll be able to treat this virus in much the same as we treat flu and other viral infections, as we gain a better understanding of it and develop our treatment strategies for the complications from this virus infection.
Dr. Wilson, I find myself sifting through the science to try to get the answer to one question of when does this pandemic end? And I was reading some reports yesterday that the increased contagion of this new strain, or believed increased contagion, could prolong how the pandemic just by virtue of needing a greater number of individuals vaccinated before we get a critical mass and can actually reach some sort of herd immunity. Is that accurate?
Probably the vaccination program will go on irrespective of this new variant, and the evidence suggests early on, thankfully, that the vaccines that we're using will protect individuals against this variant of the virus. I think the implications of this simply we will see more people with the virus, and I think that's the issue. I mean, it will probably not infect the vaccination. It will probably not necessarily impact on herd immunity and how long it takes to get to herd immunity. I think the main implications is simply more people will catch this virus, so therefore probably more people will die from it in the area where they are, especially if they're at risk. But in essence, this is we're still developing the evidence for it. But at the moment, the other issue we're looking at is whether we can test for it appropriately. And again, the good news seems to be all the tests we're using at the moment, the PCR test and the others, seem to be effective because we've already detected it. So we wouldn't detect it if the test didn't work. So we've detected the disease. So it really is about, unfortunately, just what the various governments have been saying. The issues are, what we should be doing is trying to stop the spread of disease. So the best way of doing that is to decrease the social contact.
I want to go back to the biomedics, Alan Wilson, the cellular pathology of young patients. There is a belief permeating the system that the young are immune from the viral effects on a macro basis and even at the cellular level. Is that true?
It certainly seems to be that we know that young people can get this virus, and we know they can spread it, they can transmit it. We also know that on relatively small numbers and relative to the adult population, very few young children become significantly ill from this virus. So the expectation is, or the assumption is, that they can carry and transmit it, but do not develop symptoms. We're not quite sure why that is yet. We think it's something to do with the way that the virus transmits and the way that it interacts with the respiratory cells, and these cells are less well developed. in the youngsters, and they seem to have developed some form of immunity to this, not immunity to the virus, but a protection from the symptoms and the infection itself that adults do not have. We're still looking at the science of that one, but it certainly seems that there's a protection for young children.
Dr. Wilson, there's been some discussion about the success of the mRNA technology for the vaccine that's being used really for the first time in such mass scale, and how this could lead to some sort of universal vaccine that could address future strains of viruses that come up more quickly. What's your sense of how likely that is on the horizon?
Certainly, I think one of the few silver linings we have from this pandemic is that we are now much better and quicker at developing vaccines. And I think we've learned a lot over the last 9 months on how quickly we can do this, and how effective these vaccines are. And we have developed new ways. The vaccines we're now using is new technology, methods we've never used before to develop vaccines, and that's partly why we can do them quicker. I think the jury's out a little bit on the long-term effectiveness, because remember, this is a relatively new virus. It will be several years before we know how long that immunity lasts, and whether we need to think about a booster at some stage within a few years, potentially. And that we'll only get the evidence from that by testing those people that are vaccinated and comparing them to the non-vaccinated population.
Alan Wilson, Institute of Biomedical Science president, thank you so much also for a little bit of silver lining. And Tom, I got to say, when we look back on this era, it just feels like it's tinged in a historical paint, that we're going to be looking back and studying not only our reaction, but also some of the developments on the biopharmaceutical side of things.
You know, I know James Murdoch just updated the FT statistics as well, and the bottom line, Lisa, is Murdoch lengthened everything out. There's no other way to put it.
Yeah, we're definitely looking at perhaps a bit of a longer pandemic, but perhaps on the other side, a universal vaccine. Coming up, we'll talk more about the pandemic and the response to it. Stephen Hahn, FDA Commissioner. That's at 8:30 a.m. in New York, 1:30 p.m. in London. From New York, Lisa Abramowitz and Tom Keene, this is Bloomberg Surveillance.
新型にはなんと2万点以上全身でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered. We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance Gupta with your Bloomberg Business Flash. It's a move that could change the way U.S. initial public offerings have been conducted for decades. The SEC has approved a New York Stock Exchange plan for so-called primary direct listings that will allow hot tech companies and other startups to raise money on the exchange without paying big underwriting fees to Wall Street banks. Critics say the change erodes crucial investor protections. That stimulus package passed by Congress doesn't offer any direct funding to restaurants and bars. That's another blow to two of the hardest hit parts of the U.S. economy. The spending measure does allow small businesses, however, to take out loans. And that's your Bloomberg Business Flash. Lisa, Tom.
Redika, thanks so much. Greatly appreciated. Again, futures up 12 right now. The VIX 23.34. Shalley Bassick with an important interview on America's real estate.
Thank you, Tom. Joining me today is Al Rabel of Kane Anderson Real Estate Advisors. Al, thank you for joining us.
Thank you for having me, Shonali.
Join me a little bit on a journey here, because it just dawned on me, in the early days of this pandemic, you spent about $3 billion in the span of 3 weeks. Is that correct?
No, we prefer to say invested.
Well, you invested $3 billion. I mean, that number in itself is wild. Why is it wild? Because KKR was one of the biggest firms that we knew that spent money at that time. They spent only about 2.5 in that time frame, and you were less than 5% of the size of KKR. So you clearly capitalized on the early opportunity at this pandemic. But I want to ask you now, obviously the opportunity set moving into pandemic 2.0 is much different than what we saw in March. How is the investing landscape changing for you?
Yeah, well, we have both equity and debt, and what you were referring to was on the debt side when you had the massive dislocation in late March and early April. What we've seen in prior downturns, and you can tell by my lack of hair that I've been through a few. I always say I've lived through 88, 98, 08, and now 2020. The debt markets dislocate first, and then the equity markets follow. So we see a very target-rich environment, at least in the verticals in which we invest, over the next 2 years, and it will take a while to play out. But there's some recurring themes, and you know, one of those themes is the lack of debt availability, similar to what we saw in the 08-09 downturn. So we think the equity markets have, you know, when I say the equity markets, I'm talking about real estate specifically and investing. We think a good 12 to 24 months of outsized opportunity set.
Well, you were also early in this pandemic. In the summer, when everybody saw the light at the end of the tunnel, you said that this would last a little longer. So how much pain do you see in the second part of this pandemic, and how does that change the way you invest?
Well, we've obviously got a very accommodative Fed, which does not hurt real estate at all. We focus on alternative verticals, particularly medical office, that have outperformed both in good times and bad. And this is, you know, we would put this pandemic obviously in the latter category. I still am, reluctant to make any predictions about the timing and how this pandemic will play out. We tend to think that it'll take a good 6 to 12 months from this point to really get the healthcare crisis behind us. The economic ramifications are much more far flung. But as I said, we expect the Fed to remain accommodative. We think that there will be fantastic opportunities on the real estate side, particularly in the asset classes in which we invest.
Speaking of an accommodative Fed, you have also talked about this moral hazard that comes with it, right? What distortions are you seeing happening in the market around you that may be cause for concern?
Well, yes, there's always a moral hazard dynamic. We saw that play out on the debt side. So bad actors to some extent get rewarded, and that's just, that's the way that it works. You've got to obviously protect the majority of people. And so selfishly, we wish that the Fed had been a little slower in its reaction. That's on the debt side. On the equity side, meaning, obviously acquisitions on the real estate side. I don't see really, other than potentially industrial, really much of a moral hazard. I see it far more in the public markets and with the SPAC craze. And, while history may not repeat itself, it certainly rhymes. So we see a lot of, in my view, unfounded enthusiasm and momentum, but I don't really see that playing out on the real estate side in the same way as I see it playing out on the SPAC side or maybe in the public markets.
Yeah, while we're watching the equity market soaring, we are still seeing a lot of investor interest in real estate, in credit assets. For you, this means doubling of assets in the next, from the beginning of this year into the middle of next year, and that's according to our sources. Our sources have also told us that Goldman Sachs's Peters Hill unit, a very well-known unit on Wall Street, boosted their stake in you in less than 12 months. What do all of these investors see in this market? What's the opportunity set?
Well, yeah, so, the opportunity set, or you've mentioned a couple things there, but I would say, first of all, we were, thrilled and humbled to be partnering with Peters Hill and Goldman Sachs. They've been a tremendous partner. You mentioned, our growth. I would just say that our growth is really fueled by the opportunity set in front of us. And you had mentioned earlier in this interview, obviously, us investing $3 billion. Really, it was $2 billion, but we bought notional amounts of Freddie Mac bonds that amounted to $3 billion. That was a very outsized risk-adjusted return. In fact, a portion of that was realized in June. So the only thing I'm pointing out is that our growth has really been a result of opportunities.
I have to jump in there. Thank you so much for joining us. We hope to have you again soon to talk about these opportunities. Tom, back to you.
Sonali Basak, thank you so much. Greatly appreciated. Futures up 13, Dow futures up 93. Stay with us on Washington. This morning, send me a suitable bill or else the next administration will have to deliver, and maybe that administration will be me. Trump stuns Mnuchin and McConnell and Cirilli with a gift for Pelosi. He will not sign the $900 billion deal. He wants it to be $1.2 trillion plus, and do it now. The Georgia elections are in 13 days. Markets, they churn this morning. Equities continue to lift. And Macron blinks. Meanwhile, call it the Merkel plan. Lufthansa will airlift vegetables, as they say, to London this Wednesday. Good morning, everyone. Bloomberg surveillance on an extraordinary Wednesday. Tom Keene and Lisa Bramowitz, tons of economic data at 8 o'clock as we squeeze Thursday and Friday into this Wednesday, and all of it, Lisa Bramowitz, pushed aside by truly an historic 4 minutes from the president.
Yeah, this video that he put out basically saying that he would likely veto this bill unless it increased the amount of payments, and she made a host of other changes. But what's interesting to me is that the market doesn't budge. They don't blink. People saying, all right, worst case scenario, we get more money, Tom.
Yeah, as you said earlier, it's just about more money. The math here is simple. $900 billion, add on $370 billion, gets you up $2.2 trillion plus. And then the president went through a litany of cuts he would like to see. Right now, radio silence from the Secretary of Treasury and from Mr. McConnell. We will have loudness from Kevin Cirilli here
always
in a bit with our First Word News in New York City. Here's Ritika Gupta.
Morning, Tom, Lisa. Now President Trump is signaling he might not sign that massive coronavirus and spending bill passed by Congress. Last night, the president called the bill a disgrace and said it's filled with wasteful and unnecessary items. He demanded that Congress increase the stimulus checks going to most Americans from $600 to $2,000. President Trump handed out a number of pardons, including one to a former campaign aide convicted in the Russia investigation. George Papadopoulos was convicted of lying to the FBI. The president also pardoned former California Congressman Duncan Hunter, who pleaded guilty to misusing campaign funds. Another former Congressman, Chris Collins, was pardoned after pleading guilty in a securities fraud case. And France has agreed to reopen its border with the UK. That comes after a suspension that crippled Britain's busiest port, Dover. French authorities say EU citizens and residents able to show negative coronavirus tests will be able to travel from the UK. Plus, freight traffic began moving this morning. Israel and Prime Minister Benjamin Netanyahu are headed for their fourth election in 2 years. The country's governing coalition collapsed after just 7 months over a budget crisis. The vote is set for March 23rd. Both Netanyahu and the leader of the opposition Blue and White Party, Benny Gantz, enter their campaign badly weakened. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. Quick data check. Markets very quiet now, but equity markets with a lift in the VIX from that 31 level 2 days ago comes in nicely on calm to 23.31. Lisa?
Yeah, Tom, it's just amazing. People doubling down on this cyclical trade. The Russell 2000 outperforming off earlier highs,
well
but still
said.
up about 0.5%. Also, the dollar breaking that will it or won't it strengthen trend weakening once more, Tom.
An extraordinary video, which was from reports, top secret. Even the president's legislative assistants didn't know this was coming. The president of the United States in the 8 o'clock hour last night.
I am asking Congress to amend this bill and increase the ridiculously low $600 to $2,000 or $4,000 for a couple. I'm also asking Congress to immediately get rid of the wasteful and unnecessary items.
I have 40 questions. There's no question about that. To Kevin Cirilli in a sleepless night, our chief Washington correspondent joins us right now. Kevin, what is the power of the presidency this morning?
A couple of things. First and foremost, look, he has completely ripped up the script, to quote you, Tom, in terms of where Republicans and Democrats are going to be waking up this morning to try to go over their options. Do they have the time and the votes to override a veto? Do they have the time and the votes to do what the president demands on policy? And I'll be really candid. When this news broke last night, I was with a prominent progressive source who essentially told me he's right. There should be more money that is allocated on the checks.
Right.
This was something that the president has said for quite some time, but the criticism that he is receiving this morning is, well, where were you during the negotiations?
Right, right. Well, he doesn't know Civics 101. That's not news to anybody, including his supporters, his detractors, and the rest of it as well. The one who is under the tracks here, under the bus rather, is the Secretary of Treasury, who I believe framed out the $600 statistic. What does the Secretary do this morning? Does he go out the door with Mr. Barr?
Well, I think from Secretary Mnuchin's perspective, we'll find out. But from all of the reporting that I've done over the past several weeks on this, it really was a triangle between Leader McConnell, Speaker Pelosi, and Secretary Mnuchin. For President Trump to step in here at the last minute, he views this as an opportunity to accomplish a significant policy goal, but also even if he were to risk losing the policy strategy that he wants for the outcome, something that he can say from an economic policy populist position that he fought for even in the final weeks of his presidency.
You know, Lisa, it's just extraordinary here, and it's really Civics 101.
Yeah, well, to me, the question is, what does this fissure between Republicans and President Trump mean for the Georgia elections, Kevin?
Well, you know, what's interesting is that Congressman Tom Reed, who is, of course, a Republican, just several days, or this week, actually, within the last 48 hours, it's blurring together, but he actually came out after there was the finalized proposal and said that they were going to be pushing for more money. And so in a way, the president is aligning himself with centrists right now who have been pushing. I mean, there are the only people that the president is going against and trying to get more checks is the far right of the party, who are concerned about too much spending. And so as a result of that, he's in alignment with a large contingency of Democrats as well as centrists in terms of pushing for an increased level of checks.
So, Kevin, there's a question also about what President Trump has said, about what he said with respect to whoever may be in office next year, perhaps me. How serious is that?
Yesterday, I spoke with Congressman Jody Heist, who is a Republican from Georgia's 10th Congressional District. It's an ultra-conservative district, ultra-conservative district. The congressman was at the White House on Monday and for more than 2 to 3 hours with President Trump, Vice President Pence, where they went over their strategy in order to fight the outcome of this election. Is there a significant risk or chance of the election results being overturned? No, based upon my reporting. But is there a significant conversation that is being had in terms of the politics that could frame the midterm elections for 2022? Yes, okay. And that's really where this is going in addition to fundraising.
Kevin, this is outstanding. We're going to extend this right now, folks. This conversation is so important. I want to go back to the Democratic strategy, or as you spoke to a liberal source last night. For Speaker Pelosi, this is a gift from God. I get that. But what is the timing for the Democrats given the Georgia election in 13 days? How does Speaker Pelosi and Senator Schumer thread that needle?
So, and here's now, if you look at the outcomes that are possible, President Trump now is able to say, should they lose Georgia, should Republicans lose Georgia? Well, they lost Georgia because they didn't get on board with the outcome that I wanted. And if they win Georgia, he can claim celebratory, this was a referendum on the elections and whatnot. There was another point that the congressman yesterday from Georgia raised to me, which was, do Republicans trust the institution right now? Do Georgians trust the democratic institutions where if they pass
stop,
the ballot,
Kevin, they never have. Kevin, the entire 4 years we've had is they don't trust your Washington. Frankly, they don't trust Kevin Cirilli. Kevin, what this morning does Washington do to get the train back on the rails?
Well, the reason I bring that up is because if they show up to the polls or not, if they trust whether or not voting their votes are going to be counted. And so the president's criticism of the Democratic lowercase d institutions and the voting process now puts at risk Republican turnout. In terms of whether or not the trains are going off the tracks for negotiations, We're going to find out in real time whether or not there's going to be an ability to override a veto or to negotiate.
When you speak to Secretary Mnuchin this morning, Kevin, just call up. We'll get you right in and push the guest aside. Cirilli, sleepless in Washington.
No pressure.
An extraordinary historic moment for this nation. Kevin Cirilli is our chief Washington correspondent. Lisa, I am absolutely speechless over the choice set that's available today, 12 days out, one night before that election in Georgia. And can you imagine, I can't imagine where we're going to be, say, January 19th.
Well, it just shows the uncertainty that markets have come to just expect at this point. This idea that everyone said, well, it's in the Republicans' interest to pass this bill because it will help them in Georgia. Well, and then President Trump, who's been totally quiet, comes out and says, nah, rip it all up 12 days before. And this just raises a question, you know, in markets, well, if this helps the Georgia election turn Democratic, then does that lead to just more money?
I would go back to December 26th, where there's a lot of unemployment pain that hits this nation. And also, I believe the presumed calculus here is a shutdown of December 29 as well. Coming up on Balance of Power, Dr. Fauci will join us, an extraordinary conversation. Bruce Kasman of JP Morgan with us next. This is Bloomberg Futures up 12. Stay with us.
Some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really